us this morning. They've won a 960 crore rupee order from a domestic telecom operator. It's a multi-year supply agreement which you've won, Ankit. So first off, give us a sense. Is telecom steady? Is it picking up? What's the kind of traction you're seeing? Because currently everything is so focused on AI hardware and data centers that we are tending to ignore that very critical vertical of yours, which is telecom.
No, thank you for having me on the show.
Great having you.
I think no doubt from our perspective, we have multiple segments that we're focused on. Telecom is very, very important to us. We're in midst of a 5G cycle as well as moving to 6G in 2 to 3 years. So a very, very important phase. Telecom operators also looking at converged networks of fiber to enterprise, fiber to the home, fiber through fixed wireless, as well as building and making sure that their networks are built very, very robustly for the 5G requirements. So all of that's happening in parallel. And of course, in addition to that, we have seen these large requirements from the data centers, both outside data centers, which by the way, very often are built by telecom operators, and then inside the data centers between their campuses and inside the campuses. So all of this is happening in parallel. And in addition to all of this is what we call rural networks getting built. So large networks in the US, and of course we have BharatNet in India, which we're very proud to be part of. So all of this kind of happening all at the same time.
And just talk to us about the execution of this one. You suggested FY 28-29 is when the supply for this really commences. So no revenue accrual in FY 27. Am I thinking about this right?
So it's a large tier one telecom operator in India. We've been partnering with them for more than a decade. So this is more in line with what we are seeing, that there is a strong and growing requirement also with the telecom sector looking at themselves to improve their own performance of their networks. Improve the speed, lower the latency. So these are some of the innovations that we're bringing to this telecom operator in India.
So Ankit, let me ask you in a different way, is 23% a floor or a ceiling? Could margin surprise further on the upside from the current levels?
So I think, look, from a macro perspective, there are 3 or 4 things happening. Clearly, the demand is strong. That reflects in our order book, which is now north of 18,000 crores. We're also seeing that this will be a combination of our solutions, both on the cable as well as connectivity. And as we have guided in the past, certainly our data center solutions provide better margins compared to telecom overall. So as that ratio moves, data center and enterprise, we've increased our guidance from 30% to 50%. So as that ratio increases, when we look at the numbers currently, that's our guidance of around 23% margin.
Understood. So Ankit, out of this 18,618 crores order book, how much is data center versus telecom?
So we don't break that out specifically, but one thing that I can call out is that, we have talked about a 1.1 billion order from one of the hyperscalers, and that is over the next 3 years. So, clearly 10 to 11,000 crores is just specifically that one order. And then we are also working with other hyperscalers in the US and for their global requirements. So as you can imagine, a good portion, more than half of our current order book is linked to the data center and enterprise segment.
Ankit, you're sitting on a very large order book. You've done record revenue Q1 FY27, right? Record quarterly revenue. How quickly can you ramp up, and how quickly does execution ramp up? So what's your likely top line expected to be in around the 8 to 10,000 crore number this year, and then next year? Just give us a sense broadly.
We don't give any broad senses. What I can share is that we continue to focus on execution right now. We have been talking about some of our supply chain constraints where it comes to germanium, it comes to helium, some of the polymer prices and all the other things that are happening in the market. So we're very, very focused on execution right now. We have talked about debottlenecking as well as upgrading our equipment. So we're looking at spending about 500 crores per year for the next 3 years. And at the same time, if we continue to see strong order books from other hyperscalers, other telecom operators, we may look at some capex above that.
How is raw material pricing behaving? If you can give us a sense, there's plenty of chatter that raw material prices have gone up quite substantially in the system. How are you dealing with that? Is there a pass through in the contracts or the orders that you book?
Yeah, absolutely. I think, if you reflect on the market, there's clearly, more demand than supply globally, and that has caused lead times to go up. The customers are clearly seeing fiber as the critical means of data, delivery. And from that perspective, fiber is very, very core to the next 3 to 5 years in all our conversations. So from that perspective, we are also looking at our suppliers and securing long-term contracts with them. Certainly to the extent that whether it's freight costs, whether it's polymer costs, helium, many of these have seen significant rises. And, really with the key accounts that we have globally, it's always a conversation individually. And we do look to pass on some of these costs as much as possible.
Beyond costs, though, Ankit, where exactly do you see business opportunities coming in from? Your latest order, of course, is from a domestic player, but you've also flagged Europe as being the dark horse. When does that market meaningfully contribute to your business?
So it's already a large portion of our business, maybe 30-35% of our revenue comes from Europe, historically been from the telecom and fiber to the home applications. I think globally, our understanding is that, of course, US is taking the lead. China is also building out huge data centers and has national plans of what capacities they want to reach. India itself, I think, is well placed now, from 1.5 gigawatts going towards probably 8 to 10 gigawatts in the next 3 to 4 years. So I think these are three places quite well placed. Europe actually is starting to pick up, but it's just going to take time because execution on the ground, getting the permits as well as power transmission, these are large challenges that they need to solve for. But I do see a collective will at the European Union level to accelerate this. So probably in the next 12 to 18 months, there will be movements in Europe as well, particularly for data center deployment.
Okay. And, I want to delve a little bit more on the 23% margin number that you're looking at, right? How much of that is scale driven? How much of that is pricing and demand driven? If you can give us a sense, because right now there is a certain segment of analysts which feel that the pricing is a little skewed, just given the kind of, or the manner in which, the entire AI wave is catching the world, right? So trying to get a sense on how sustainable this kind of number is from a medium-term perspective.
Yeah, again, I would reflect on it on 2, 3 parts. One is definitely that, there is a good portion of the connectivity that we see, and that is going to be higher margins. So more and more of what we sell, both to the telecom and the data center segment, will be cable and connectivity together. We've talked and launched this solution called Neuralis, which is getting very good traction in the market. So in a simple way, as we sell more and more of our Neuralis solution and portfolio, that should drive towards these higher margins that we're talking about. I think the second part is, ultimately, while we're looking at many of these costs that have gone up, we are also taking various initiatives from debottlenecking and capacity increase. So as we're able to increase our capacities or just improve our capacity utilization, we'll be able to drive, our fixed costs over a larger base. So that should also help drive margins. And then I think the third part clearly will be that as we continue to grow our, data center as percentage of revenue, that will be the third driver of margins. So that's what we see. Yes, the pricing is better for the data center segment, but we are very, very clear that long term, we want a good proportion of data center as well as telecom segment, probably in the ratio of 50-50. And that's how we're driving our strategy and our order book.
Okay. Ankit, thank you so much. Really appreciate you coming in, taking out the time and giving us this perspective.
Thank you.